Studies estimate that around 90% of crypto investors lose money, often due to poor timing, absence of an exit strategy, or exposure to outright scams.
Hey.
Unfortunately, I was among that 90% in my first bull run in 2017. Today, I will shed some light on my past mistakes and share a solid strategy that can put you in the winning 10%. Hello and welcome back to Crypto Decoder. Today, we're diving into one of the most important aspects of your crypto journey: exit strategy. Whether you're new to crypto or you've been through a few market cycles, this strategy is going to help you lock in your gains. I've been in the crypto game since 2017, and trust me, I've learned some hard lessons. Basically, I lost everything in 2017 bull run and almost made my way back in 2021 cycle. Almost. But then, I failed to hit that sell button and gave away most of those gains. Today, I'll break down everything I've learned since then so you don't make the same mistakes. Let's get started. Number 1. Set a reasonable portfolio target and DCA out on the way up. The first step is simple but crucial. Set portfolio goals. Once you do that, the key is to stick to them. This is important because in a bull run, the market can feel like it's going to keep going up forever, but that's when you need to be the most disciplined. Don't shift the goalpost. So, the mistake I made in 2021 was waiting for Bitcoin to hit $100,000. The market sentiment was so strong that $100,000 seemed guaranteed. It never happened and I didn't cash out anything substantial. I will not repeat the same mistake and hope you won't either. Now, for this cycle, I'm looking at a Bitcoin top around $130,000 to $140,000. I'm planning to cash out 80% of my gains when it gets there, no matter what. The remaining 20% will stay invested in long-term holds and moonbags. That's my plan and I'll stick to it. However, I will not wait for Bitcoin to hit that range. I will start booking profits around 100k Bitcoin. So, in the worst-case scenario, if Bitcoin doesn't cross $100,000 this cycle, I won't just hold my bags forever. I have a plan B which I'll discuss at the end of the video. Before that, let's talk about a key point. That is staying liquid. Number 2. Always stay liquid. One of the biggest lessons I've learned in crypto investing is the importance of liquidity. Keep your assets accessible and do not lock them up for long periods. The logic behind this is simple. Crypto markets are volatile, and locking tokens often restricts your ability to respond to sudden changes. Let me give you a couple of examples to show how being locked in can lead to losses. Back in 2021, I locked a significant amount of Polkadot tokens at around $40 in hopes of gaining exposure in the parachain auctions with Akala. Akala. At the time, it seemed promising, but the project struggled to meet expectations. As a result, I was left watching as Polkadot bled under $10. Another example was with Celestia last year. I locked Celestia with expectations of airdrops. Never got any airdrop and it dipped below $5. The lesson? In crypto, you want to keep your funds flexible and liquid whenever possible, allowing you to pivot quickly as the market changes. Avoid long unlock periods unless you're absolutely certain of the project's direction. Number 3. Timing-based exit. History shows that the best time to exit is typically about 14 to 16 months after Bitcoin's halving. Based on that, I'm personally planning to DCA out of my positions starting from August 2025. That's when I expect market to be on the rise. The idea isn't to sell everything at once, especially because altcoins can pump even after Bitcoin tops out. So, keep some capital ready for those late surges. Number 4. Market sentiment. Watch the signs. Pay attention to market sentiment. There are a few clear signs that indicate the market is nearing the top. For instance, when the Coinbase app hits the top 10 on the App Store. Or when the Fear and Greed Index hits extreme highs, you know the end is near. The signs are everywhere. Your boomer coworker suddenly swears XRP is bound for $50. Your favorite celebrity just launched an NFT collection, and your Uber driver can't stop refreshing his crypto portfolio. Then, out of nowhere, your friend, the one who laughed off Bitcoin last year, asks for a tip on the next 100x coin. This is the sign to offload your bags and walk away. So, what is the plan B that I was talking about if BTC fails to breach 100k? Will I become a community member of various projects like previous cycles? No, because I use trend indicators. Last cycle, all the influencers were talking about a super cycle, claiming that Bitcoin would keep going up forever and that all the indicators were broken. And boy, were they wrong. The indicators accurately flashed warning signs of market tops, but very few took advantage of that information. One of my favorites is the 21-week exponential moving average EMA. This is a solid indicator that you can easily find on TradingView. If Bitcoin drops below the 21-week EMA for 2 consecutive weeks, that's a big red flag. It usually signals that the top is in and it's time to start exiting. In addition to the 21-week EMA, there are other indicators you can use to gauge the market top. I specifically prefer these 3. PI cycle top. This indicator signals potential Bitcoin cycle tops when a short-term moving average crosses above a longer, adjusted one. MVRV Z-score highlights overvaluation or undervaluation by comparing market cap to realized cap. Extremes suggest tops or bottoms. Quell multiple shows minor profitability, high values suggest potential market top, low values indicate market bottom. You can learn more about these indicators by visiting free website lookintobitcoin.com. These tools can help you make more informed decisions about when to exit, even if you can't perfectly time the top. Okay, I hope this gives you a clearer path to locking in your gains and avoiding the pitfalls of holding on too long. Remember, the goal is to come out ahead, not to perfectly time the top. Don't be afraid to take profits during those God candles. Nobody got poor taking profits. That's it for today.